Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, pay less taxes, have a beautiful retirement. What could be better than that? I am one of your co-hosts, Ben Barzideh. As usual, of course, I have with me my esteemed, trusty co-host, Matt Nadeau.
Well, hello, everyone, and happy 4th of July out there. Hope everybody's staying safe, having fun, eat something good, blow some stuff up, shoot some fireworks off, whatever you
There
do.
you go. Don't shoot off your fingers, right? It's been so hot lately, too. My goodness.
Yep.
So definitely summer is here. All right. We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington and serving the Chicagoland area. And we are fiduciaries. And as an independent, family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies that are buying everything these days.
That's right. And hopefully they're not buying the 4th of July. We're going to enjoy it without them. That's right. And of course, want to say hi to all of our clients. You tell us you listen every week. Thank you so much. We, of course, appreciate the trust you place in us, and we love every one of you. And we have a great show planned for today. The topics we want to discuss. One, it's really important that we understand inflation and rate hike concerns. And yes, there could be some concerns, but are they getting overblown at this point? We're going to talk about why we think that may be the case. And then later in the show, we're going to talk about a really good topic, especially if you're a grandparent out there. If there are some benefits if you're a grandparent and you own a 529 college savings plan, where we actually call it the Grandparent Loophole. You're going to learn some strategies you could use for your grandkids, really help them out if they're saving for college.
You don't want to miss that. And hey, we have some big news we want to announce before we get into our segment today. If you are a retiree, pre-retiree, and you want to learn more about our firm, we are having a fantastic workshop, a dinner seminar at a beautiful local country club on Thursday, July 16th at 5:30 p.m. So it's coming up in a couple of weeks. During this complimentary event, we're going to cover the new tax laws, how they affect your IRAs, your RMDs, topics like what everyone wished they knew before receiving an inheritance, tax reduction strategies, the biggest risks retirees face in a year ahead. And of course, we're going to talk about our Advance and Protect actively managed investment approach designed to help mitigate market risk and volatility. All of that good stuff, all while enjoying a refined dining experience in an intimate setting. So seating is limited. This event will fill up quickly like the last one we did. To reserve your spot, please call 847-780-2980 or visit bnwealth.com.
All right. Well, let's get started. And first of all, we hope we see you guys all there where you can hear us talk about a bunch of topics. But today we're going to talk about inflation. And you hear bad news about inflation, but it may not be as high as you think. And that may sound ridiculous if you're dealing with like these rising prices for groceries and rent, healthcare, and other essentials, especially in light of, the higher oil prices we had seen because of the Iran war. And that is a reason many economic forecasters were actually calling for as many as 3 interest rate hikes in 2026, not cuts, hikes. However, that rate hike camp may actually be proven wrong. Recent inflation data is actually suggesting the era of rapid price acceleration may actually be ending, not re-accelerating. And new Fed Chief Warsh may not be as hawkish as people think. So we're going to come back to hit the new Fed chief pretty shortly, though.
Let's get back to inflation. Last week's report met expectations with monthly core PCE index rising 0.3% month over month and a 3.4% year over year. That wasn't worse than feared. And with oil prices falling quickly, the belief is that the inflation pressures will hopefully soon ease. Now, the bond market appears to agree because following the PCE report, the 2-year Treasury yield, it actually declined. And that matters because the 2-year yield is one of the best real-time gauges of where the market thinks the federal funds rate is headed. So in other words, investors look at the same hot inflation report and concluded that not that more rate hikes are coming, but that the worst of the inflation fears may already be priced in.
That's why we call the bond market the smart market. When we see the bond market react like that, that gives us a little more hope that that's the direction we're heading.
No doubt.
And that actually brings us also to the new chair of the Federal Reserve, Kevin Warsh. And he may not be as concerned about inflation as he may not be looking at the same inflation scoreboard as everyone else. And he signaled at his Senate confirmation hearing last spring that he actually likes to look at a different measure. It's the Dallas Fed's trimmed mean PCE over the standard core PCE measure. And that distinction matters a lot. So here's what they are. The core PCE, that does strip out food, it strips out energy, but it can be skewed by a handful of like unusually large price movements. And the trimmed mean PCE, it actually takes it a step further by actually smoothing things out, taking out the most extreme month to month moves on both ends. And it's really designed to give policymakers a cleaner read on what underlying inflation really is. And right now, that cleaner read, it's looking a lot cooler.
You know what it reminds me of, Matt? It's like the PCE index, but on Ozempic. That's the trimmed one, where like you can have a few bad months, but it's not going to add to it. You know, as long as you're on it, you're going to lose weight.
Still going to lose that weight.
It's not going to go up. So here's what's interesting. The trimmed mean PCE is running materially below the core PCE. It's actually at 2.4% versus the 4.1% for overall PCE inflation, and overall includes food and gas. So that is one big reason investors may be overestimating how hawkish Warsh will be on rates. And get this, expectations of falling inflation, a surging dollar, and policy rates that are still relatively restrictive compared with much of the developed world. And then all of a sudden, the case for new hikes starts to look shaky. And don't forget, the high interest rates that we currently have already restrict the economy, especially at the medium and longer term durations, which is what most people and businesses borrow at. So that doesn't mean that rate cuts are imminent, but it does mean the market may be anticipating rate hikes that will never come.
Yeah, and again, getting back to the new Fed chief, we're learning more about him. He's shaking things up even in another way, and he had a blunt message for Wall Street. Stop looking for clues on interest rates and pay closer attention what's going on in the economy. So Warsh on Wednesday repeated his dislike of the so-called forward guidance, which has been used by previous Fed chiefs to shape the financial market views on the economy and expectations for interest rate changes. Other central bankers are actually like-minded. The chief of European Central Bank, Christine Lagarde, said her biggest regret was to feel compelled to act in accordance with prior forward guidance instead of just being able to judge the economy independently in real time. So Warsh emphatically seconded that view and, quote, said it, President Lagarde's answer on forward guidance, I couldn't have said it better myself.
You know what's funny, Matt, regarding the dot plots? They were the most accurate things ever.
The inaccurate things, yeah.
I mean, the forecasts were almost never correct. You know, so no one really paid attention to them anyway.
That's right.
Looks like they're a thing of the past. So meanwhile, here's another factor to take into play. ADP, the jobs report came out this week, and it actually showed that businesses added 98,000 new jobs in June. That's the smallest increase in 3 months. So that greatly reduces the concerns of a hot labor market, pushing up the chances of interest rate hikes. And once investors realize all of this, we could see a huge surge in the market because those expectations for rate hikes that are built in, they would go away.
Right.
Very good. And of course, we've had a good week in the market this week. We are very bullish on it. We haven't taken our foot off the gas in our advance and protect actively managed models that we manage for our clients. In fact, in some of our more growth-oriented models, we are pedal to the metal, 100% on equities. In fact, the Magnificent Seven, that basket of stocks had a great week so far. I think it's up, over like 8% the last few days.
Yeah. And remember, Ben, we monitor everything, our positions every day, right? And if markets deteriorate, we'll do something. We'll actually sell out. We won't do the old buy and hold mantra and have you stay in. We'll actually get out while we wait for things to improve. And if you're out there and you want to learn more about like our advance and protect process, or say you're a retiree or pre-retiree and you want to learn more about our firm, we have some exciting news. We're actually having an exclusive educational dinner workshop. It's at a beautiful local country club. It's on Thursday, July 16th at 5:30 p.m. And this is a complimentary event. We're going to cover more than just investing. We're going to talk about tax laws, how they could impact your IRAs, how they impact your required minimum distributions, things you wished you knew before receiving an inheritance, tax reduction ideas, Roth conversions, biggest risks retirees face, and of course, our advance and protect process and how that actively managed investment approach is designed to help manage stock market risk and uncertainty. So all that information, it's valuable. You'll have a great time. You get a refined dining experience, a great steak, but seating's limited. So you're going to want to reserve your spot ASAP. Give us a call at 847-780-2980 or visit bnwealth.com. We look forward to seeing you on July 16th, but don't go away. When we come back, we're going to talk about the grandparent loophole for 529 college savings plans. Welcome back. Thank you for tuning in. This is Money Hour Radio, where we try to help you grow your money, pay less taxes, and of course, have a beautiful retirement. I'm one of your hosts, Matt Nadeau. I have with me my co-host in full 4th of July celebration mode, Ben Barzideh.
Hello, everyone. Happy birthday, America.
That's right. 250. Well, anyway, hopefully when we're recording this, United States hasn't played yet, so we're hoping they pull it off tonight.
No doubt.
Well, of course, we are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management. It's a comprehensive financial planning firm. We're located here in Barrington, and we're serving the greater Chicagoland area.
And before we get into our segment, just as a reminder, if you're a retiree or pre-retiree and you want to learn more about us, we have some big news for you. We are having another exclusive dinner workshop at a beautiful local country club on Thursday, July 16th at 5:30 p.m. Last time we had one of these, it was packed. So we're going to go over a lot of good information. We're going to go over taxes, investments, talk about the big, beautiful Bill Act, which came into effect in 2025. Big chunks of it came into effect this year. We're going to talk about how it affects your IRA, how it affects estate planning. We're going to talk about a ton of good things, all while enjoying a very nice steak dinner, also fish if you don't like steak. So seating is limited. It will fill up quickly. To reserve your spot, call 847-780-2980 or visit bnwealth.com. So we look forward to seeing you there July 16th. All right, Matt, let's talk about 529 plans.
Yeah, and really we want to focus on a specific benefit for 529 plans, which is if it's a grandparent-owned 529 college saving plan. And we call this the grandparent loophole. So it's pretty powerful. So basically we want to discuss how grandma and grandpa can actually help pay for college, slash some taxes, and all at the same time not mess up the financial aid for the student. And yes, friends, we're talking about the amazing grandparent-owned 529 plan. It's the grandparent loophole. We love it. And obviously, if you're out there, you have grandkids, you love them, right? Many people say they love their grandkids, maybe a little more than their own kids. Oh, won't say that directly to them. But here's a way you can actually tangibly show some love to them from a monetary way. And of course, it's if and only if you have the necessary funds available.
That's the kind of tangible love I like, the monetary ones, right?
Yeah, here we go.
I like getting cash for like my birthday instead of gifts.
All right.
It always fits great and it never goes out of style, right?
Good to know. I'll remember that for next birthday.
All right. So these 529 college plans are sponsored by states and typically come in two flavors, okay? There's the prepaid tuition version, and then there's the savings plan version. And most people use the savings plan version, which works kind of like an investment account for education. You put the money in, it grows over time. And if you use it for qualified education expenses like tuition, books, and sometimes even room and board, the earnings come out tax-free. That's right, tax-free. Now, here's what gets interesting. While parents own 529 plans for their kids, grandparents can. I'm sorry, here's where it gets interesting. While parents often own the 529 plans for their kids, grandparents can open one too. And when they do, that's when the strategy gets even better. That's because many states even give grandma and grandpa a state income tax deduction or credit just for contributing. So you can help your kids and maybe lower your state tax bill. Not bad, right?
Yeah, but wait, Ben, there's more. It's like that infomercial.
No doubt.
So yeah, everybody, if you put it in the 529, you're in the right state, you may be able to get that tax deduction. But historically, grandparents, they were worried that if they helped out too much, they could hurt like their grandkids' financial aid eligibility. You know, and you've probably heard of FAFSA, which is the free application for federal student aid. And that formula takes a look at parents and student assets. So if you're a parent and you own a 529, guess what? That counts towards the parent's assets in this formula. And student-owned assets, actually, that's even worse for financial aid. They get assessed more heavily in the aid formula. But here's the twist. If grandma or grandpa own the 529 plan, it does not get reported as parental or student assets on the FAFSA report. It is not reported. So that's why financial planners and advisors like us, we lovingly call this the grandparent's loophole.
Of course, there's got to be a little disclaimer here, right?
Of course.
So, tiny disclaimer moment. Some private colleges use something called the CSS profile, which may ask more detailed questions and could treat grandparent assets differently. So check the specific school's rules, but again, it's a limited amount of schools and it's a few private schools. But under the federal aid rules, a grandparent-owned 529 can be a very beautiful thing. So 529 plans are also sneaky good estate planning tools. That's because contributions are considered completed gifts to the grandchild. So that money generally moves out of grandma's taxable estate, but she still controls the account. And control and generosity. That's like the grandparent dream combo, right?
It's great. And if you have a big estate, this is where it can get powerful. So let's say you have a large estate. Grandma's feeling extra generous. Oh man, I can't be prouder of Billy. What a great grandkid. There's something that she can do called super funding. She can actually front load up to 5 years all at once of annual gift exclusions into a 529, all in one like single contribution. And it's like saying, here's 5 birthdays worth of college money, and you better study, you better not party, because I still control the money. And think about that. Right now, the annual gift exclusion is $19,000 a year. So if you can do 5 years worth, that's $95,000 all at once for each spouse. So let's say grandma and grandpa, they're married. You could now double that to $190,000 for each of your grandkids all at once. It can be powerful if you have a big estate and want to super fund it.
No doubt. And there's so many strategies for reducing your estate value. There's all these different trusts that can accomplish that. But this is such a powerful, just easy strategy if you have grandkids, just to be able to get a lot of money out of your estate and take care of their college. So let's recap. Here are the benefits. You get, with these grandparent-owned 529s, you get the tax-deferred growth, tax-free withdrawals for qualified expenses, potential state tax deductions, estate planning benefits. It is not reported on the FAFSA as an asset, and then distributions no longer hurt federal aid eligibility. So come on, what's better than that? And you know what? We talked about the 2 different options, the investment account version or the prepaid tuition version. I actually had a client recently I was looking into this for. They live in Washington, and they have one of those 2 type of options. So the prepaid one, the way it works is basically when you put money in there, the state guarantees that that money is going to grow at the rate of inflation for college. So basically, you lock in today's prices regardless of what the inflation rate is. So it's kind of like a CD. Like if you're conservative, that's going to at least grow with inflation. Whereas the original one, the savings one, you can invest it in the stock market. It can be in portfolio. And generally speaking, over the long term, that should make a lot more than the 4%, but certainly adds a different level of risk.
And Ben, along those lines, one of the reasons that 529 version that you're talking about, where it's the invested version, they've added a whole bunch of new rules over the past few years to make it even better. So like, for example, there's some caveats and limitations, but let's say they don't even use all of those funds of their 529 because it's grown well, or you overfunded it because of some of the estate planning. This allows your grandkids or your kids or whoever you've got it set up for, they can oftentimes be able to roll some of that over into a Roth IRA, so you can get them a jump start on creating a tax-free retirement account. They can use that money for things beyond just your traditional college. They can do it for K through 12. They can use it for trade schools. They keep expanding the benefits of these 529 accounts to make them more attractive, and it can really be powerful. You can even switch beneficiaries if like one student doesn't use it all up. So there's a lot of benefits when you're working with somebody who understands these on how to benefit yourself and your kids and grandkids.
No doubt. So hey, if you enjoyed today's episode, hug your parents or grandparents and maybe ask them if they've ever heard of a 529 plan for grandkids. If they haven't, tell them to watch this segment on YouTube on our page, moneyhourradio.com.
That's right. Remember, and if you're out there with any of these financial planning topics, when we're talking about investing, tax, estate planning, you do need to really look at working with a qualified professional who understands these concepts. Usually a good financial planner like us acts as the quarterback and helps coordinate with your other professionals to help benefit you with these strategies. And this really jumps into the big news we've been talking about. If you're out there, you want to learn more, you're a retiree or a pre-retiree, and you want to learn more about our firm or learn more about strategies, the big news is we have another exclusive educational dinner workshop. It's at a beautiful local country club. It's on Thursday, July 16th at 5:30 p.m. And during this complimentary event, we're going to cover the new tax laws, the One Big Beautiful Bill, how it's now impacting your IRAs, your required distributions, things you wish you knew about receiving an inheritance, tax reduction, Roth conversions. It just goes on, and including our Advance and Protect actively managed investment approach. We'll spend a little time going over that as well. All of this information you'll be able to have. You'll meet us. You're going to have a beautiful dining experience, a steak, a fish, something wonderful. It'll be delicious, but seating's limited. Last time we packed the house, so to reserve your spot, call us at 847-780-2980 or visit bnwealth.com. We look forward to seeing you July 16th. All right, we're out of time. Happy 4th of July. We'll see you next week.
Hey, go USA World Cup.